Hello, everybody, and once again, welcome back to Accounting 101 with me, Galvin, as your take through. So, we're going to work out the cash flow number. Question 2. We already worked out question 1 in the very first video. If you watched that, if you haven't, I recommend you go back because in that video, we go through all the principles of loan repayment schedules. So, right now, we're going to work out question 2. Question 2 says you have acquired a loan from Post Banks to expand your salon of 30 million Ugandan shillings. The loan is to attract an interest of 5% payable in 3 equal installments using both the reducing balance method and the fixed installments method. Prepare the required loan repayment schedule. So, if you remember everything we talked about in the previous video, we talked about the two methods of preparing a loan repayment schedule. We talked in detail about the reducing balance method. We also talked about the fixed installment method. So in this question, we are also required to prepare both these documents. So I say that I will be preparing both of them for you just so that you can get the skills on how to prepare both of them on your own basing on how the question has been asked. So right now we have a question that is requesting us to prepare both of the financial document, that is requesting us to make a loan repayment schedule using the reducing balance method and then the fixed installments method. So right now we have our number, our question, giving us a loan size of 30 million with an interest of 5% that is to be paid in 3 equal installments. So I'm going to show you how to prepare this loan repayment schedule using the reducing balance method and then the fixed installments methods. So let's dive right in. So I think I'll first write the question. So using both reducing balance method and fixed installments method. So we say that a loan repayment schedule is a plan that shows how money borrowed in brackets a loan is to be paid back to the individual or organization from which it was obtained. Basically, it's a plan of a business or an individual that shows how they are going to return the money they borrowed. So most companies borrow money but do not return the exact amount of money on a specific day. They pay it back in installments. That's just how most businesses function. So we're going to start off. So we talked of our titles in loan repayment schedule. We say that we start by writing the business name, then the business document with the amount of the loan, and then the interest plus the installments, and then the method we're going to use. So our business name is OGS Limited, and our document is a loan repayment schedule for the amount of 30 million Ugandan shillings. So loan repayment schedule for the amount amounting to 30 million Ugandan shillings. So those are the first two lines of our title for this loan repayment schedule. So the third line is supposed to show our interest plus the installment. So we're going to write attracting an interest of 5% payable in 3 equal installments. So attracting an interest of 5% payable in 3 equal installments. So the fourth line shows the method that we shall use to prepare this loan repayment schedule. So right now we're going to start with the reducing balance method. So we are going to write using the reducing balance method. So, as we had said earlier, our loan repayment schedule is made of 6 columns, and the rows depend on how many installments you will be making. So, our first column has duration, shows the amount of times money was paid. The next column has the loan size in shillings, showing the money we owe to whoever we borrowed it from as a business. The next one has principal. It shows how much money we'll be returning in terms of paying the loan. The next column has interest, the money that will be added, that will be the gains of whoever lent us the money. And then the book value, which is the total of the principal and the interest in shillings also. And then the balance in shillings as well. So there we are. Our very first column is done. Everything filled in and everything expressed in shillings. So you underline that, rule that very well to form a very good shape. So right now, since we are paying in 3 equal installments, we have 3 columns. So we divide 30 millions by 3